Hi everybody, and welcome back to FANG Friday. This is Ross Healy, the Chairman of Strategic Analysis Corporation and a Senior Portfolio Manager at McNichol and Associates Asset Management. Well, right now we're biding our time, or should that be Biden time, awaiting the outcome of the U.S. election. Looking ahead immediately, however, I will not be appearing on BNN on October the 26th. I will, however, be on air on November the 18th instead. As we get closer to the day, I'll give you all the details. Anyway, as always, thanks to everyone who likes this video and all our subscribers. It helps with the YouTube algorithm and allows us to bring you better content, so I thank you for that. I should note that this is now the reporting season for the FANGs, and we should expect that some of the values that we are showing you here today will change. I said that last week, and we still have yet to see any new balance sheets. However, at least one could change fairly radically, so it will be important to stay tuned to FANG Friday for the next few weeks if you're following the SVA signals closely. Finally, as a reminder for those who are watching FANG Friday and who are not yet SVA clients but are interested in what you see, send us an email and we'll get in touch. With that in mind, let's take a look at the FANGs. Well, let's start off with Apple. You know, it we had a perfect sell signal on the stock, and it dropped a full break point, and we had, I think, a pretty good buy signal there, and the stock was moving quite nicely. Of late, however, it has been setting back with the other FANGs in the market. It has now reached the HB4. However, I do have to warn you that Apple has been buying back stock, and depending on what they have done in the past quarter, the HB4 could change and could perhaps change radically. Okay, turning to Alphabet, we got a nice sell on the stock back here in early September. And for those of you who wondered, well, wait a minute, Ross, the stock didn't get up to a breakpoint value. Why would you be selling here? Well, the answer was actually quite simple. If I look back over the past few years of trading of this stock, it never gets to its MSG price, never in 10 years. And so it got pretty close. And we also had sell signals from both Apple and Facebook. So it made a lot of sense to throw in Alphabet with that, and indeed that's exactly what happened. Now, setting back to the low super growth price, I said, look, this stock looks as if it's going to give us a nice bounce, a nice trade. I would take my heart in my hand if I were considering that and buy some. And indeed, that is exactly what had happened. We have had a nice rebound. Note, however, that still doesn't mean that the stock's going to get to its MSG price. So I think if we get fairly close to the peak that we recently had, again, we'll want to take our money off the table here. NVIDIA, well, look at NVIDIA. This stock dropped so fast in 2 days. It had a reversal the first day, actually, and the next 2 days the stock dropped 100 points. Okay, never gave us a chance really to get out. So I had simply said, look, I think we'll just hang on and stay with the company. And indeed, we did get a nice rally, and one was underway before the recent kind of, I guess maybe pre-election jitters, pre-election setback. I don't know what we're going to call it, but most of the FANGs have moved back down in that period. So far, the HB4 price is holding, and I very much would stay with this stock. Facebook, well, Facebook we got an absolutely perfect sell on back in August. And why, by the way, was I so happy to take that? Well, looking back 3 years, look where the stock peaked out before that time, okay? Right again at its bubble price. By the way, look how quickly the stock set back from there. Okay, now the first time around it just plunged right to its MSG price. That's 5.5 times book. This time around, it didn't quite do that. Now, I said there that look, we appear to be having a bounce here, but I've got to sell on the stock at a very, very nice price. I don't think I'm going to do anything about changing my opinion on the stock until I get a nice SVA signal. Amazon, well, look at Amazon, okay, once, twice, 3 times trying to break through its HB4. Okay, the first time was just a quick spike, but the second time we actually really virtually got an SVA buy signal on the stock, that is to say, a 3% move over 5 days. Didn't help the stock a bit. It quickly dropped back. Fortunately, it rallied back again to its HB4, so we got that kind of that breakdown, pullback before a further decline. I had thought there was a good shot that we would get down to the HB3. That was not to be. The stock has rallied back again, but again, this time we didn't get a confirmed buy signal. We just sort of got a test of that before setting back. Okay, turning to Microsoft, what we see here is what we call sloppy trading. Look at the stock got up to its HB2 price, has been trading either side, but either side indecisively. Now that contrasts very much with what happened to the company back in 2019, where the stock traded up against its HB1 price, that's 10 times book value, for, oh gosh, I think about 4 months. And when it broke out, by the way, look at that little breakout, check back. When it broke out, the signal was good, and the stock went right up to its HB2 before getting caught in the COVID-19 sell-off. This time, we don't have the same character of trading, and that kind of thing makes me somewhat nervous, to put it mildly. Finally, we come to Netflix. This company missed its numbers, its subscriber numbers, and its earnings numbers, and is now setting back. We don't have a new balance sheet as of yet, so I'm not sure exactly where the HB4, which is 20 times book value, actually it is. However, I do have to note once again, remember we were talking about Microsoft a moment ago, sloppy trading either side of the HB4. I wonder what it is portending. Now, it's worthwhile taking a moment to look at Netflix from a longer-term point of view, because when Netflix starts to, when investors start to be uncertain about this company, things can turn nasty and can turn nasty very, very quickly. The last time that the stock was up here was back in 2011. And this time when the stock let go, it really let go. In fact, it dropped from the equivalent of about $45 a share, I think, down to about 10 before the shares rallied. However, the market wasn't finished with it yet. Okay, and the shares, after a little rally, carried on right down to their super growth price. And the super growth price is a very, very important valuation point from the mathematics of structural valuation. Okay, I have seen many powerful growth stocks, including, by the way, Nortel and Research in Motion, trading up in its bubble zone and collapsing. They will typically collapse to their super growth price before they get a powerful rally, and that's exactly what happened with Netflix. Now, this time, the stock, of course, kept on going, whereas with both Nortel and Research in Motion, after the rally, the stocks kept on going only down. Now, this isn't the first time that this has happened to Netflix. If we go back even further in time to 2003 to 4, the same thing happened again up in the bubble zone, and when it let go, the stock dropped from the equivalent of, well, $5.16 down to a dollar, I think $1.35 at the low. Of course, it wasn't that was pre-split. But again, that was a 75% drop, and look where the shares stopped, right at their super growth price again, back here in 2005 and again in 2012. Now, last thing, that it may be a spurious observation, it may be quite important. The gap between 2003-4 and the peak in 2011, that's about 7-8 years, and we're now in 2000. Well, that's about 8-9 years, and I wonder if history is about to repeat again. Not by the way that I am forecasting that, but I am saying I think that I would watch it, particularly if this company cannot meet its sales numbers and its earnings numbers at a time when it should be easy to do so. That kind of thing makes me quite nervous. Overall, things have sort of calmed down a bit, and some of the risk is out of the market in the near term due to the promise of some sort of support package to come. To summarize this week's action, our two buys, Apple and Nvidia, have certainly found their footing and are not a concern at present, although both have pulled back and are sitting very close to their critical support breakpoints. Do not be surprised, however, if very soon those Apple breakpoint values and the chart itself looks quite a bit different than today. Alphabet, after reaching its 10-year valuation extreme and setback, is now rallying over its LSG price. I told our viewers that I would be aggressive here, take my heart in my hand and buy the stock for a trade on any sort of a breakout. After a nice rally, however, remember the lesson of the longer-term chart. Concerning ourselves, a couple of weeks ago, Facebook was heading down nicely, down to SVA support, but as I said, those market technicians got in the way of a sound buy signal. However, having sold it at its bubble price, 7.4 times book, I remain in no hurry to get back in again. If you are new to Fang Friday and you hold the shares yourself now, at this juncture, I would probably keep them. My short-term downside target is the mid-super growth price, which is about 13 to 15% below the current price. And I doubt that most viewers should attempt to trade for that kind of percentage gain or loss. Microsoft is struggling to get back to its HP2 price without a lot of success recently. I have referred to the Microsoft chart as sloppy trading. That is to say, with not the same precision that it used to trade, and I am concerned that it's trying to tell us something that we don't necessarily want to hear. Two other stocks that failed to hold above their HP4 price, that's 20 times adjusted book, were Amazon and Netflix. Now, Amazon and Microsoft are two peas in a pod. They look dead the same. Netflix has been random all year. Did manage to recover to its HP4, but couldn't hold on, especially in the face of poor sales and earnings. During larger market corrections in the past, including earlier this year, this has not saved the stock from deeper setbacks. But of course, you have jotted down that general market sell signal for the NASDAQ 100. that I talked about 3 weeks ago, so you know what to do, don't you? For now, stick with the market. We had a bit of a close call, but all continues to be well for the time being. I do have to conclude by observing that the FANG stocks are not trading as confidently as I have seen them in the past. I'm not saying anything right now, but I do find this a concern. Okay, if what you've seen has interested you and you would like to see what your own stocks are telling you, then send us an email at info@strategicanalysis.ca. As a reminder, clients get a lot of benefits, not just access to over 3,000 charts of North American stocks in Canada and the United States. You get trade ideas and weekly webinars where we go into the nitty-gritty details of how to use the charts in order to become a better investor. When you sign up, I will personally take you through our system on a one-on-one video conference and show you how you can use it to become a more confident and profitable investor. If this sounds like something that's in line with your goals, then let's take the next step together. Anyway, for now, this has been Ross Healy, the Chairman of Strategic Analysis Corporation and the Senior Portfolio Manager at McNichol & Associates Asset Management, reminding you that nothing, including investing, is difficult if you have the right tools. I'll see you next Friday.